Hi everybody, welcome back. It's been a week since we actually released a new video, so I wanted to get this out there on how some stocks are doing that I'm tracking and buying heavy, in fact. Before we start, I just want to show you this. We have blew past 700. We have purchased Shibu Inu, and we'll have a video showing that we actually purchased, we had a bet that if we get to 700 subs, we would buy $100 worth of Shibu Inu, and we did that already. I think when we were at 800 subs, we did it a week ago or so, and we just blew right past it, didn't have an update video, and now we are at 1,100 subs. We really want to thank you. Thank you for watching, of course, and we hope you continue. We have some cool stuff coming up, just like our video updating the bet, obviously, but I'm going to be pre-ordering an Arcimoto. That's one thing, and we're also going to be possibly using some of our Tesla gains and buying a couple of Model Ys. Yes, right on the channel. We're going to record it, so hit the like and subscribe. You're not going to want to miss us blow all our winnings on Tesla stock to buy an actual Tesla. This is not financial advice. You should not be selling your Tesla stock if you have it. We just figure, okay, we're old enough, we'll get one Tesla each. We're going to do a video soon, so you're not going to want to miss it. It's going to be fun watching us spend all our cash instead of invest all our cash, which we should be doing, obviously, because this is not an asset. I keep saying it. It is a liability, but it is a beautiful liability, right? Look at that car. I think I'm getting the black one. And of course, like I said, the FUV, I'm going to be pre-ordering an FUV, not Carlos, but I'm going to be pre-ordering it. I'm going to be waiting for the tax credit, though. And I'm assuming that I can get probably $6,000 off of this thing as soon as the tax credit for the EVs hits. So I'll be getting one of these puppies as well. It'll be cool. So I'll have a lot of EVs just laying around the house. Like I don't even go anywhere anymore. I sit on YouTube all day. So there you go. That's going to be interesting. Finally, like we have part of the infrastructure bill that's passing. I think it's 1.2 trillion. And in the 1.2 trillion, we don't have the EV tax credit yet, which is unfortunate. So that'll make the Teslas more affordable. That'll make the FUVs more affordable. Any electric vehicle, obviously, will have a big tax credit, minimum 30% or $7,500 for a Tesla or an Arcimoto. And if it's a union-made car, then you'll have an extra $4,500, which is insane. Absolutely crazy. This is where the current infrastructure bill of 1.2 trillion is being spread out. I'm not going to go into all of this, but just know that the EV tax credit is not there. Right now it's going to cover roads and bridges, public transport. Amtrak is getting bailed out or something like that. It's ridiculous. Instead of us building brand new railroads, we're giving the money to Amtrak. Okay. Broadband internet, I guess that's important. But once again, where does that money go? That goes into basically three carriers, AT&T, Verizon, and T-Mobile. If you're not investing in like dividends or a different portfolio besides all growth, these companies are getting massive handouts, okay, massive, to build out their own infrastructure. It's literally free money for these companies. So in this case, it's broadband. Like I said, it's AT&T, Verizon, T-Mobile. Maybe these are the winners for the $65 billion here that's being given out. Electric grid. This is, once again, what's funny is that who are the winners in this? We will find out, but I bet you it's just old energy companies. So there's a lot of pork in this bill. Let me put it this way. Like, do I feel it's being spent absolutely correctly? It sounds great in theory. We do want to make a better electrical grid. We do want better broadband infrastructure, but I feel like every time they give these big companies money, they don't use it wisely. So I don't know. I don't know what the answer is, honestly, but I don't know if the money is being used exactly wisely. But look, we are moving forward. That is what's important. That we are now looking back. Internet is important. Electrical grid is important. These things are still important. I just wish the dollars were spent a little bit wiser and not just to these conglomerates that really don't care about any of these things. And all they want is the cash, right? What's important for us here is that the EV tax credit. So we know the EV tax credit is coming up. It's going to be $7,500 maximum. So like a Tesla will get $7,500. But if you're a union-made manufacturer, you would get $12,500. And this part has not passed yet. That's why I'm just bringing it up, that we are still not there for this little part of it. The good news is the bill might have this kind of language. The new language allows for vans, trucks, and SUVs with a manufacturer's suggested retail price of up to $80,000. So that means to me that the Model Y and 3 are easily, well, at least the Model Y, because it's an SUV, right? It's going to be in that 80,000 max if you don't, I guess if you don't get any upgrades and just get the long range, which I think it's like 60,000 right now. If there's any plaid versions or anything, maybe that won't fit in the tax credit. And Tesla's not getting the $12,500. Teslas will be getting the $7,500. Anyway, that's the coverage on what's happening. We still have to wait for the tax credit. Now let's get to the stocks. I want to cover a couple of companies here, starting with Enphase. Now, Enphase has been on a tear, and I think I talked about it before. I thought it was going to be trading in a channel, but they had such a great quarter. We briefly discussed this last time that they blew up. Right now, they're sitting at a 32 billion market cap. Forward PE is 105. You can say that's high once again. I just don't think. I think you buy Enphase at any point, you dollar cost average. So even if it's high right now in terms of the forward PE, it's probably going to be high for a long time. Can it drop by, back to 80 and 70? Yes, of course, the stock can go down. Honestly, I am dollar cost averaging Enphase no matter what. It's just a great company. And this is the chart, so we don't have to spend a lot of time. We've been over Enphase, and I'm going to have links below and on top for you to check out my old Enphase videos. But we've been following this since $20. And at this point, this has been a 10x, and I'm still trying to get more shares. The reason this chart is beautiful. Let's go over it real quick. Okay, so I thought we were trading sideways in this range, but we, after the quarter, just literally just skyrocketed up back into this main channel. So you see these blue lines? This is the main channel of Enphase. And I've showed this a million times. I know there's new people watching, so I'm going to show it just one more time. Sorry about this. Sorry about for everybody who's seen the Enphase chart. I know it's not impressive anymore. But basically, Enphase has been in this massive bull trend for 4.5 years, maybe going on 5 years now, right? Since 2017. And it's been in this uptrending channel. So this is a monthly chart still. And you can see that we sort of started trading sideways and we broke out of the main trend. And I thought possibly that we would continue a little bit longer, maybe until next year, into just sort of trading sideways. But they had such a blowout quarter that we went right back into the channel. And I've covered this on a previous video. I just want to point it out where we are. And now let me go to the daily chart. And the reason I showed you the monthly, which shows that the trend of Enphase over the last 4.5 years, right? Now we're back in that channel between these two blue lines that are trending up. That means to me that if we stay bullish, especially with this EV infrastructure bill, even now, I would say Enphase is a buy, because if you dollar cost average, even if we retrace back, I don't even see us retracing back at this point. I hope I'm wrong because I want more Enphase. I keep saying it. You got to keep buying Enphase. You just should never stop buying this company because solar is 1% or less than, let's say 1.5% of the entire country right now. What happens when solar is 10 to 20% of the entire country and every other country in the world? So Enphase has a massive, massive trajectory of growth for the next decade. So if you're buying it and you think it ran up $50, $60 and went up 50%, you think you're out of the game? Man, you are wrong. Let me just tell it this way. But let's go to this year. What do I think will happen? If we stay in this trend and we hold, we might retest this blue line again. We're sort of at this point right now, $237.90. We can maybe go back to 225 or so, retest it and see if we bounce off. But if it's bullish, then look, the minimum just by the charts, if it stays in there, is $275. You're still talking another 50 bucks, let's say $40 from here up, okay? If we are incredibly bullish, look, Enphase has massive runs. You can see. So if we just have a crazy massive run, I mean, can we get up to the $400, the $460? Look, I don't think we're going up here to the $800 that the chart says it can trade in this range, but I wouldn't be shocked if we were in this range, as I've been saying almost for a year now. I want you guys to go back to our videos and look at, I've been updating the same exact chart, not really changing anything, just looking at Enphase's price and looking where it's going. That's it. So go back to our old videos and take a look at what we said about Enphase. I've always said that between 250 and 450 is very doable at the end of this year, if we stay in this channel. It's a big if, of course. And so what's my plan? Do I dollar cost average even if it tanks? Yes. You still buy Enphase all the time at some sort of weekly schedule, monthly schedule, whatever it is. I would say weekly at this point. You don't know. So even if it tanks, even if it goes back down and it stays here at 180, 160, does that matter? Think about the growth of this company over a decade. If you are in it for, 3 months, it might matter. But if I'm in it for 5 to 10 years, it doesn't really matter, honestly. So I'll buy it at any price at these prices. Anything under 275, honestly, is sort of a buy, especially at 240. It's not even at 275 yet. So 240 and under, total buy for me. I'm still dollar cost averaging, and I probably will buy on Monday. I hope it has a tiny bit of dip so I get another $5 off or whatever, but I don't think that matters, like I said. So this is where we're going. This is what I think is going to happen. If we stay bullish all year, 270 to 450, you heard it here first, and you've heard it here for a year, by the way. So like I said, go back to our previous videos. Look at my price predictions. I'm not a genius. I am just following the trend of this company. I think the stock is an easy double, triple, quadruple for me. So I really don't want to be trading Enphase. I just want to be buying into Enphase at every opportunity. Okay. I think that's all I have to say about that. Let's cover this sick little puppy called Very Good Food Company. And I've been talking about it for a while as well. I have videos. I'll include links above and below. Usually easier to check below, by the way. But Very Good Food Company, I said it was supposed to hit by the charts, not, once again, I'm not a magician, $1.50, $1.55. Watch my old videos. I said it has to hit that if it's going to just follow these charts. And it was behaving very technically. That's why I felt it was going to hit it. Did it mean I didn't dollar cost average? No, I still dollar cost averaged in. But guess where it went? It hit $1.53 or $1.51 even. It says $1.53, but I think I started $1.51. Either way, $1.50, $1.55. Totally irrelevant. Doesn't matter. It hit the price target. And yes, I did buy shares. Right now we're at $1.67. This is why this company still, look, it's a very risky investment because look at the price of sales. It did go down. Because the stock price is going down. But the price of sales currently is still 22. At least that's the estimated one. It might be a little bit higher. I've seen higher. I've seen as high as like 36. So you're talking about 20 to 30 price to sales, which is kind of crazy. They better show that they are growing, and soon, because I did go heavy in this range, as I said. We've talked about this many times. I've updated this chart just to have these lines. I've just included the buy zone and everything. That's it. Everything else is the same. This trend is the same, this trend, and where I said it was going to go to $1.55 by looking at the past. So here was my $1.55 that it should bounce off. And look, it had a nice bounce off of this range. So I would say this is a buying opportunity for those people thinking a little bit longer term. And I've had a whole video about my valuation for this company if it succeeds. These are big ifs. They have to produce the products, produce the food, open their factories, make everything, and then we have a stock that is like a 10x, okay? 2025, I predicted $23 approximately. So that's a 10x, honestly. It's even more than a 10x now. Let me just check the calculator. So when I predicted the 10x, it was around $2 and change, I think. Now it's $1.67, and so we have $23 divided by $1.67. We have around a 14x. Okay, I think that was roughly what I had before, 14x, 2025. That's an amazing return if they execute on the vision that they are selling us. They are telling us they are ramping. They are telling us that they're going to produce more food. They are telling us they're getting in more stores and more SKUs, and they're releasing new products. So I've been keeping track of that, and they do look like they're doing it. So that's why I'm not afraid of my investment, and I was buying heavy at these prices of $1.60, $1.65, $1.55, like all around. So I'm not trying to time it to be exactly $1.50, $1.55. I'm just buying it as it's in this sort of range. I call it the buy zone. And look, can it fall further? The heavy accumulation zone. Now, this is getting iffy because if next quarter they are not producing the food they said they will and they're in this zone, look, there's a risk that they will go out of business or they'll have to raise more money and dilute us again. They already diluted us, so dilute us again. So you have to be careful here that we have to watch what they do. But if they are not diluting us and they're executing, but the stock is tanking, this is like a crazy, if it gets down to like the $1 to $1.50 in this range, let's say $1.25, I would say it's a crazy buying opportunity. At this point, if it falls under $1, you're talking about either they're going bankrupt or you have the opportunity of a lifetime. And that'll depend on what they're doing. Once again, this is all an execution risk. If this all happens and we see it play out, we will see what happens. But I actually don't think they're going to get here. If they release some good numbers in Q4, maybe that'll be like January, February. If they release some good numbers, we might be lining up to like some massive breakout here. So at around February is really the last sort of month that this can stay in this range without collapsing further, right? So we can hang out in this range and then collapse down if the company is not showing any progress. We can collapse earlier, of course, but what I'm saying is that at least by February 2022, we need Very Good Food Company to come out and give us some good news, okay? Because at this price, I really don't want to be buying anymore. I already got all my shares. So if it goes down even further, look, I have to keep dollar cost averaging if they're executing. But if they're not, then look, it's a falling knife and you could be going to a buck or less, all right? And so the reason I say that is if they're not executing. This is all execution risk. We need to see some progress on them ramping their facilities and selling millions of pounds more food, okay? They are promising us crazy numbers, so they better hit some of these numbers or at least get close. So what's my final thought on this? If they have some good numbers, which I actually think they do, by February 2022, we can see a big breakout here. And honestly, if it breaks out, I know we have a couple of resistance lines, but we can go to $3. So you're talking about $1.60 stock going to $3 relatively fast. I see that as very possible. Does that mean I'll risk 20% of my portfolio? Absolutely not. This is a complete spec play. It is probably like 1%, 2% of my portfolio, and I would be willing to increase it another 1 or 2% if it falls even further, but I don't need to take risky bets like that because if this is a 10x, a 1% of your portfolio could turn into 10% of your portfolio. This is why it's important not to go everything into something so speculative. Last one up, we haven't covered PayPal, but I've been following and buying PayPal for a long time. Now I am buying it again. So why would I buy such a massive company? Look, PayPal is doing so many things that I don't know if I have to explain why you would buy PayPal because I would assume a good 80% of you or 90% of you or maybe even 100% of you. I don't know. Tell us in the comments, but I would think almost everybody used PayPal at least once. I use it probably 3, 4, 5 times a week because anytime I go online and there's a PayPal link, I would rather pay through PayPal. Also Venmo. I use Venmo all the time to send money, to get money. It's just easier. Currently, there's no fees. They're starting to trade crypto as well. So now there's going to be another revenue source for crypto. And if crypto is pumping at least for a quarter or two, then their revenue might keep increasing in terms of that whole side of it. Either way, PayPal is a growth beast. I'm buying it on this dip, and let me show you why. We always go to the past. Let's look at PayPal, because I've never really shown this chart. So PayPal's monthly chart. I don't know how many charts I have to show everybody when they start to understand what's going on, but PayPal since roughly 2015 has been doing nothing but going up, okay? And right now we have, this is why I'm bullish currently and I'm going much heavier into PayPal like right now. This is timely. You have to check this out. You have to make your own decision. This is not financial advice. I'm personally buying a lot of PayPal and I have call options 2 years out for PayPal. I think 2024 actually. I have 2.5 years out for PayPal call options because I don't believe it'll be at $225 in 2.5 years. That is my belief here. Let me go to the daily. So if we're in this trend between the two green lines, okay, so hopefully you guys can see that. We're currently in this trend, at least we've been in this trend most of the time. We have failed back in March 2020 where it broke down, but it quickly recovered. So I don't see this as a risky bet. I think if you buy this for the long term, it's underneath the 300-day. It's underneath the 200-day. Do you think PayPal is a risk? I don't. I think it's an easy double. Like, it's just money I don't have to worry about. So instead of putting my money into a bank account like Wells Fargo and just getting 0.01% interest, well, PayPal's going to probably pay me 100% interest over the next year or two. So even if it's 50% compounded, right? Who cares? My point is that I consider this just a crazy sort of bank account with super high interest because PayPal is not collapsing. They're not going out of business. That's not happening. I don't care if their quarter is down or the next quarter is down. It just doesn't matter because this is a high quality company. And like I said, we're under the 300-day a lot. We're actually we're touching the green line almost here at the bottom of this trend. Okay. And I think if we fall a little bit further, we can possibly at this orange line, which is around 200 and let's say $10. This green line is around $220. Like, does that matter? Like, is it $10 here and there? I don't care. I'm buying PayPal heavily. And where's the upside, right? January 2023. Look at where even just the average of it is $436. I don't know if I can make this any clearer, but this is what I expect to happen, that we will go to somewhere around $436. So it's not exactly a double, $450. Yeah, it's almost a double, right? So you're getting almost a double. And if it goes a little bit higher, the maximum it can go is probably 500 and change. So it can be a double. But I don't care. I mean, like this PayPal thing that I'm doing is literally for the long term. Once again, I try to buy long-term bets and I try to buy more than I want. So when it doubles or triples, then I get rid of some shares and I fund my life, right? I buy a Tesla on another episode. So hit the like and subscribe. Watch us spend our PayPal money, our Tesla money. But that's the point, why I try to buy more shares harder when it's sort of like, seems like a great deal. Like, it's so hard to like convey how good this looks to me. And I'm calling out LG Investments because you had a video, Lee from LG Investments, he had a video saying he's waiting for PayPal to go down to like $200. And I'm like, I wanted to yell at the top of my lungs. We're going to have a video with Lee as well. So please hit the notifications. We're going to have another video where we talk about this. But this company is already under the 300-day. Like, how much more of a discount do you want? So when is it okay to buy a company? Like, if you're following these charts even a little bit, anything under the 200-day, it's a buying opportunity. Anything under the 300-day, it's like a massive buying opportunity. If it's touching the trend lines, like really bearish signs, like meaning like, can it dip below it? Absolutely. But it's usually a good time to buy the stock when it's such a high quality company. For example, if Apple and Microsoft and all these companies do what I'm showing you with PayPal, you have to buy those shares and put it in your long-term portfolios. Anyway, I hope you're paying attention to this one. This is not to be missed. And I know a lot of people just want the dollar. I know a lot of people just want to speculate on Shibu Inu, and you want to speculate on Floki. Another video come up with Floki. I speculate a little bit there. But that's not where the majority of your money should be. It should be in these high quality companies that you can turn $1 into $2. And if it takes a couple of years, big deal. I know everyone wants a 10x right away, but this is such a high quality business. What else can I say? You guys should definitely check this out. I'm buying heavily into PayPal, and I've been buying it for the last week, like straight, like every day. Just I'm selling things to buy PayPal right now. That's how critical I think this moment is in time. When you're given an opportunity, when you're given a stock of high quality, I go in hard. And if I'm wrong in the short term, I don't care. Once again, let it go down to $200 or one. If someone thinks it's going down to like 180 or something like that, we had some support here, 180. Yeah, I don't see that as a problem because that's just a bigger opportunity to buy more shares. Because at 180, either one, the business is failing, unlikely PayPal's failing, or two, it's just being crushed under the weight of like all the selling pressure. Because I think what happens when a stock starts to roll and sell, there's a lot of limit orders that are hit. Algorithms pick it up and they start to sell. So there could be a push further to the wrong side of the tracks where basically it's being pushed too hard out and undervalued. And if that happens, oh my God, I want to go in like just fistful of money and just buy this company. So I hope it hits 180. I doubt it will. The lowest I see is around 210. Let's say 210-ish, 205-ish, maybe 200 if we're lucky. But I don't even think we're going to get that far. That's why I'm just going in hard right now. I think that was a lot of stuff we covered. We're going to have a lot of videos. So remember, we're going to be buying FUVs. We're going to be buying Teslas. We're going to have a video with Lee coming up and discussing PayPal and a bunch of other stocks, including FUV as well, if they release some quarterly numbers and all that. We have so much cool stuff happening. We want you to come with us. Hit the like and subscribe, hit the bell, and I'll see you on the next one.